Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. It is Thursday. We got a bunch of stuff coming through here. Don't have very much time before the news. Let's go to that first here. Oh, I forgot that I held on a second. We got U.S. initial jobless claims on deck. Looking for a reading of 228K versus a previous week of 225K. The risk here is that number is higher than expected. U.S. Philly Fed Business Index -6. Okay. There's been a lot of layoffs lately in the tech sector. I think that we're going to start seeing some of that in our numbers. Also, we had some comments from Bullard, who was speaking, pushing the markets lower, and he was talking about here. If I can come back, St. Louis Fed President Jim Bullard, the policy rate is not yet in a zone that may be considered sufficiently restrictive. His presentation says a rules-based approach would suggest the rate should be somewhere above 5%, perhaps substantially so. Bullard offers some reason to think the policy zone might decline if inflation decelerates, but warns that such expectations have proven wrong for the last 18 months. Bob Iacino, James Bullard showed that using even dovish assumptions, a basic monetary policy rule would require rates to rise at least around 5%, while stricter assumptions would recommend rates above 7%. His speech was getting into the zone, and it's, they posted it on the St. Louis Fed. I think that this whole presentation we should read. Oh, these are just the slides that I got here. Okay. We'll watch that later. We get about 30 seconds here for the news. Good morning, D. How are you doing? Can already see the 10-year is a little bit sparse. So don't know if I'll be able to trade this news. At least not the initial news. Let's see where they go. I think there's a chance here that these numbers end up being dovish and cancel out the downside move that we've had here from Bullard. But let's see. Okay, so initial jobless claims under expectations at 220K. Housing starts 1.425 million, so it's slightly above expectation. I'm still waiting for the Philly Fed. They are trending up here, though. Well, somebody decided to buy it. Whoa, Philly Fed was really bad. Okay, so we got a big order above us at 27.5. Let's just see they can get through that. Well, we ticked down a little bit. It moved down. So it's a chasing order. Interesting. There's nothing in the other two instruments, though. I'm disappointed that the initial jobless claims weren't higher, but that Philly Fed Business Index, that has really been negative 19.4 versus a negative 6. That's a really bad number. So I want to read this Bullard presentation because here's the thing: is the argument that I've always been hearing about. Okay, so they traded through it. Is like there's the rules based approach, right? And like the Taylor rule is like you need interest rates to be above 5%, and the rules based approach makes sense for the following reason. You need those interest rates to get above inflation to incentivize investors to shift their investing patterns, right? They're not going to be interested in the bonds if your interest rates don't overcome the rate of inflation. Essentially, that's the argument for like the Taylor rule for setting interest rates, right? But the other side of it has been that just the mere fact of raising interest rates tightens monetary conditions. For instance, big tech has just been absolutely slaughtered, and all they had to do was raise interest rates, and it is raising unemployment as big tech lays off all these people, right? So is the rules-based approach really actually necessary to bring inflation under control? And I want to see what supporting evidence Bullard has for his point of view. But we are in an interesting situation because the flows that we might get off of the economic news that we got and kind of like CTAs and everything else that we've been getting, because yesterday they really trended up. They really trended up pretty nicely yesterday. So, well, the micros are being pretty uncooperative at the moment. I'm not so bothered by it moving against me as much as I am that there's still a wide spread. You know, there was a big order up there. They did trade through it, but then things kind of fizzled out after that. So we'll have to see if we're going to get more buying coming through. Now is a good time for us to kind of go through the charts a little bit. Here in the ZN, you can see yesterday, pretty strong uptrend day. In the end was like 10 basis points. It was really slow and it didn't really burst out until after we started trading. But it was a trend up day. But then in the overnight, giving up pretty large majority of those gains. S&P 500 overnight down pretty hard. Oil languishing at its lows as well, although I would say still within the range. Natural gas the opposite. Gold and silver pulling back a little bit. Silver kind of trending down the other way. Copper not looking so hot. So growth in China still not good, I guess. Bitcoin took a little bit of a hit yesterday, but has been flat today. And the dollar seeing an out of nowhere rise overnight. Probably part of the Treasuries coming back. But no clear driver for the change in the dollar. News Squawk pointed that out several times. They seemed quite perplexed. Global worries. Well, I tell you what, the whole thing about the explosions in Poland and everything was quite the episode, I guess. But in the end, nothing came of it, right? I'm still a little perturbed by Zelensky just immediately going out. Oh, they attacked you. We all need to gang up on Russia now. All this, and then it turns out that like it probably came from Ukraine, and the Ukrainians like, no, it didn't. But like, well, I'm a little disappointed in our Ukrainian friends on that one. But it's okay. We can just sweep it under the rug and just kind of ignore it, pretend that it didn't happen. Okay, so we have seen price come down back to the bottom end of the range that we've had so far today. but I'm not really seeing a whole lot of flow yet. So we'll see. Maybe if we get down to the bottom, they start to come through. We'll see. Should note that it seems like the 10-year is holding up a little bit better than the others. Ouch. Are they really going to keep the spread this wide in the micros? Well, a little bit of buying came in there into the 5-year, but at least enough to slow it down for now, but when I think about inflation, I kind of wonder, the whole thing was like, is inflation transitory? And I think that the answer I come out with at the end of all of this is that some inflationary forces may be transitory. But if you get inflation and you don't do anything about it, that tends to trigger other inflation. So I think it turns out that the forces they were worried about were transitory. But we got inflation in other places because the Fed didn't act, right? So now the transitory forces seem to have come out. So, like year over year inflation rates are like in the 5 to 7 range, right? But does that really justify the rules-based approach using a 5%? I'm not sure it does. I kind of feel like that you need to be above 3 and that we're probably there. So I don't know if that's sufficiently restrictive, but it's probably close. Because you can just see the effect on the economy is there. Like, we're going into a recession. And even though the initial jobless claims was slightly under expectation, it was still pretty close to 222. And that's a lot. 222 is still pretty high, Okay, well, the spreads came in. So that's good. So I am really starting to feel this thing where like the Fed may have to adjust its expectations because of the economic conditions. But Bullard, at the very least, who's been the most hawkish, he's not going to say that. And I'm kind of wondering, I kind of think that the rest of the FOMC doesn't agree with them, What would be the difference to a recession versus today? Well, so we may already be in like what would be the traditional definition of a recession, which is like 2 quarters of negative GDP growth. I think we may already be there, but for the feeling, the average person to feel the recession in the way that you do during a regular recession, you need unemployment higher, right? So I think the big difference to like if we go, the economy goes further and it becomes a real problem, and it would have to mean higher unemployment. Yeah, and we are seeing some unemployment. But the thing is that the area of the economy where we're seeing the unemployment, it's basically like the jobs are coming out of the super big tech companies, and they're probably just going to filter out into the rest of the tech industry. Like those people are probably still going to be able to find jobs pretty easily. Big order at 22.5. It will be interesting in 2023. Could be. So the thing is about all of this is that scenario kind of contradicts the price action that we've seen of the last week at the very least, right? So that kind of a situation would mean more economic volatility and more volatility in the markets, right? And what we've seen in the last week is volatility contracting substantially, right? So if that scenario is going to play out, then we've got a long ride ahead of us, because that's not the mode that the market's in right now. Although they may, who knows? They seem to be having difficulty catching a bid here. Maybe Bullard is the thing to put a kibosh on the whole thing, What next catalyst for escalations for recession, housing, maybe, I don't know, unable to keep payments, etc. Well, so the housing market is not looking so hot, right? I don't know if the housing market being so bad really does it, though. Because, like, by and large, people are happy about it. Because they want to get into houses and it's too expensive. So, it seems to me like housing is not going to be the data point that moves the Fed. Right. I mean, ultimately, the thing that's probably going to get the Federal Reserve to say, like, okay, maybe we need to reduce interest rates is going to be unemployment, right? That's the most important data point. And having core, okay, so there was a big order in the 5-year and they traded through it. They bought it. And it looks like they're trying to push a little bit further beyond it. So maybe we are going to have some uptrend here now. Although it's curious to me that all of the big orders have been on the offer side. And we've seen it in multiple instruments. And it's like they get through it, but it doesn't like extend through it. So maybe there are some big guys selling. Oh, so Bullard is still speaking, I guess, and it was saying that we might have a good dynamic if inflation comes down in 2023, which is what it seems like is happening. It would be interesting to do a study to show what is the net change in the treasuries when different Fed speakers are speaking, because I think you would see that it's pretty clear that when Bullard speaks that treasuries fall. What did they blame the overnight? So I think that the overnight sell-off in treasuries is largely because of Federal Reserve President FOMC member Bullard's speech that he's giving right now, because he is a hawkish. And his argument is for a rules-based approach, that the Taylor rule says that you need to get interest rates above 5%. And perhaps even up to 7% in certain circumstances. You ever use the move index? So, I mean, I don't get that data live, so it's kind of hard for me to like factor that into my live trading. But it's a volatility index of the treasuries. It's certainly something that can help you, yes. This is not looking so good for me, guys. Well, it's looking like my overall trade thesis isn't playing through here. That I thought that the economic numbers, well, first of all, I thought that Bullard was largely done And second of all, I thought that the economic numbers and some of the other flows that we had going on, continuing, that we had yesterday, I thought that they would continue through and that we would see a strong up move. And it looks like the up move fizzled out and that we are starting to see some more downside. It's still a little bit of a tepid flow, but it's not very encouraging. It also looks like in my desire to get in during the news that I got a really poor price. So this would be kind of funny if it's like all of the exactly all the moment blah, at exactly the moment that all the CTAs go long and then the treasuries get hawkish and rates start rising again. That'd be 30-year did go to a new low to the charts. I don't want to look at it. I don't want to look at it. Oh, it's painful. We're getting some big bids appearing. It's kind of funny because when the big offers appeared, that kind of ended up like being bad for the treasuries. So you would think that the big bids appearing now would maybe be good for the treasuries, but I kind of think that they're going to trade into it, right? Okay. This is just, that's making me way too fucking nervous. Because I'm afraid there's going to be like a really huge stop run here. Yeah. Well, it was a tiny, there was a big order at 19, but there's a much bigger one at 18, right? And that's what I'm worried about. I'm looking at that and I'm like, they're going to stop through that. I need to bail. Sucks. I mean, I had my reasons for taking it, but that was probably one of my worst trades. And it was kind of in a situation where I said to myself, I'm going to have to take on a little bit more risk to do it. So it didn't work out. It's kind of extra painful. But I'm going to wait and see how they trade into this big order and then see what we do from there. What's this? Yeah, well, the unemployment number wasn't bad, but the Philly Fed index number was really bad. And not only that, but like yesterday we saw really strong buying, and I think part of that was from CTAs. And I think that even though what Fed's Bullard is saying is hawkish, I think that he is an outlier. So I don't expect as much flow coming through because of him. But since he's been speaking, it's been about 30,000 contracts. So I think that one was wrong. I think I was just wrong in that situation. But I was hoping that, we were going to get a strong push that eclipsed the other move when all of those other flows came in. And it looks like they're not willing to do that. It could be if we wait a little bit longer and he finishes, he may already be finished. I don't know. But that's gonna happen. all we can do is just work with what we have now. Now let's look at some correlated instruments here. 6J is kind of moving pretty closely in lockstep with the treasuries. The dollar seems to be doing more of its own thing, though. Overall dollar strength today, though. Yes, and we do have more Fed speakers today. So let me come back here. Bowman at 7:15 or 9:15 Eastern time, and then Bank of England Tenero at 9:30. Mester at 9:40. Okay, wait, it could come back. Forex Factory sometimes will have these listed and can tell us where they're speaking at. Bowman due to speak at the Financial Literacy and Education Commission public meeting via satellite, so I don't expect that one to be too important. Tenero, there will be audience questions expected. Mester, due to deliver opening remarks at the annual Financial Stability Conference hosted by the Cleveland Federal Reserve Bank. That one might be more important. So the 941 is more, maybe more big of a deal. Okay. So he's still speaking and he says the base case is slow growth, but the recession risks have risen. I'm wondering to myself, you know, in those situations where the spread is really wide, should I really be taking trades? And I'm really wondering. So when I placed that order, I didn't necessarily expect to get executed right away like that. So I'm not particularly liking that fill. Five-year is looking a little fidgety, isn't it? Yeah, it's the 5 years being really, really fidgety. The 10-year is showing a tendency. So I think one thing that might be going on here is I am getting messed up by the flow in the 10-year a little bit. Because the 10-year is a little bit more buy flow than the other two. But like as soon as I saw that, like, oh, maybe they're gonna buy, they went right down for that big order. So not looking so good for any upside today, man. Oh, does TradingView have a calendar now? You're saying it has a fire symbol by it? Well, okay. It's just the same good music choice today. It's just the same. Sorry, I think that my brain is a little bit like because I took a loss. It's the same playlist every day. It's just the stream beats hype. Yeah, it's a really long playlist though, so. Okay. So kind of the issue that I got going there now is that like I took a follow-up. And that one almost immediately went against me. That one kind of hurts your mentality, right? So I think that I need to, if I'm going to take another trade, that I need to regain my composure a little bit. So I can kind of feel it in my face. Like I'm very upset about it. Amazon is looking to trim headcount through a voluntary buyout program. Wait, what? Cristiano tells Pierce Morgan that infrastructure at CME was way better than FTX. Says CME owners don't really care about markets. They just like, well, that's probably true. I don't know who this Cristiano guy is, though. Cristiano Ronaldo? Isn't he a soccer player? My NFT collection is coming. Yeah, it is. He is a soccer player. That's really weird. Why is Sam Bankman-Fried not arrested? I don't know. Explain. I think I need somebody in law enforcement to explain this to me. Is it like if you're trying to extradite somebody for quote unquote questioning that you want to be nice and pretend like, you know, you're not actually going to throw the book at them because otherwise they might work harder to avoid getting over here or suicide themselves or something? Because I am kind of wondering, like, why are they not like, oh yeah, we're totally gonna we're gonna prosecute we're gonna prosecute TF out of this guy, like. It doesn't make sense to me, but I think that might be a situation that I don't understand. So, well, I have to say, even though the price movement seems quite bearish, the flows have been still quite fidgety and not super clear, and that was why I gave that trade so much more room than I probably should have. I'm still okay with having taken the trade, but I guess when I'm sitting here and looking at it, I'm still kind of looking for a long in the treasury. Yeah, I think the Fed is at 112.18 buying. What makes you think that it would be them? By the way, we do have auctions today, right? 10-year tips at 11. I mean, the thing is we saw some big orders up here. We saw some big orders down here. They weren't like large enough orders for me to be like, oh yeah, like that's a really big flow, but was a thing. I am seeing like overall flattening in the curve too. Seems like 19 is the spot. It's definitely starting to give me some of those liquidity hole vibes. It's not already. I mean, it's kind of been doing that for a while. It kind of looks like it's definitely stuck. So maybe, so I think that if we were going to see a continuation to the downside, that it would maybe come in like 10 minutes. So let's keep an eye on that. The moment that you know they're starting to push some of those the higher end of the prices again, so yeah, look at that. I want to get smashed back into the range. Very curious. I think somebody took the opportunity there to sell a bunch more. Go listen to what Ray from Confessions of a Market Maker says on his video about it. I'm gonna bet that he's gonna say something that I think is misleading and not relevant. I've never heard of that. It's a podcast. Ray who? You gonna come and break new lows? They're sitting right there at the low. You're gonna have to tell me which you're gonna have to tell me which episode, like which episode number. Oh, maybe I can do it that way. Yeah. Confessions of a Market Maker, Ray. Episode 2. Oh well. JJ and Ray, yeah, I can watch that. I'd have to watch it another day. I mean, that's like an hour-long thing, right? I have to watch that afterwards. You have to constantly watch value change and understand the orders that come. Well, it sounds like normal market making to me. That sounds like regular market making to me. Use a correlated instrument to determine where your value is, and then constantly shift your bid and offer, and hope that somebody hits into you, right? So let's see here. They did break a new low there, didn't they? And interesting, about 6,000 contracts traded as well. When you trade the DOM, how many trades are you placing? Well, as of late, I've usually only been 1 or 2. It's going to be more if I'm losing, right? Which is not a good thing. I am kind of wondering, because I took a loss off of that. I tried going long off of the news releases, and it did not work out. Look at the freaking chart, man. It just, there's a little spike up, and then zhoop, right back down. My Epic Pen is still broken. I wonder if I restart my machine, if that will fix it up. See, the way that Okrikan came in and said it, it made me think that he was gonna so it was gonna be something about spoofing, or the games that you play that you know, things that people typically come in and say to make you question whether the information in the DOM is actually valuable or not, right? But I think that it's kind of a distraction from an argument, because yes, there's information in the DOM that can be misleading, or, you know, send you the wrong direction, but that's going to be the case with any piece of market data, right? The larger, in the larger scheme of things, the important thing is that it's the orders that move the market. And so to really understand what the market is doing, you need to be watching the orders. And the best way to do that is with the DOM. You don't use point of control with the DOM? Well, I mean, it's on there. Look, this point of control is at 19. But like, here's the thing is I didn't really focus on it, but I did mention there, like, that they were stuck at 19, right? So this move down is happening a little bit too soon, but there's a large offer coming in and everything. So I don't know, man. So what I'm seeing right now is that in the 10-year, it's just it's just kind of getting dragged along. The 30-year as well, like I am seeing the cumulative delta to the downside in the 30-year, but it's not a lot, and I feel like that the 30-year is just being dragged down. The place where I do see the volume really coming, though, is in the 5-year. The 5-year seems to be moving down. So this makes me feel like the flows could reverse, but it's just not happening, right? So at this point, I have to wonder what additional flows might be causing the pressure in them, because when you look at the price action, this is like, oh yeah, we're you know, everybody back on the train to 4%, you know, like, I don't know. I think that my analytical skills might be a little bit compromised from taking a losing. I don't feel like that my brain is 100% there yet, right? DOM is just a super hard tool to use unless you have lots of experience and can see through the mess. Yeah. Well, so I think that the thing here is that the thing that I think most retail traders are missing is that they want to try and ignore the context. And when I say context, I mean predictors of order flow, right? Is you need to come in here and you need to say, okay, when CTAs are doing this, this is the way that the flows tend to go. When there's a piece of news, this is the way that the flow tends to go. When there's a Fed speaker, this is what you see, right? Like, Like you get enough experience of seeing certain flows, and you get an idea of like how it tends to go, right? So this move that I'm seeing right here, the reason why I'm starting to question things a lot, like I want to go with the flow. I want to go with it, but I just can't seem to get myself to do it. The flow doesn't seem right. This doesn't look to me like we just all shifted our expectations because of something that Feds Bullard said. That doesn't look like this flow to me. This looks like something higher time frame. Because it's kind of, and the reason I say that is because it's like it's really slow about it, right? Like it goes down, you know, it seems like it's not going anywhere, and then you get tons of pressure coming down into the other direction, not like out of nowhere, right? I mean, now that we're at 14, now I'm seeing some very, very strong flow selling. Yeah, this is the 100 Thieves playlist. Right. So my issue now is that I've seen so much volume come out that it's hard for me to try and go for a continuation, right? Although I don't think that I would have made too much. I think I got, where did I get out at before? It was three, or where was I looking at? 378. So $20 the other way. $30 the other way, actually. That's a lot of volume there at 14, though. That's very likely to become a spot. Another thing I think I should be looking at here is if they come back to that 19. Where you were trading? So I've been doing the DOM as long as I've been doing futures, is the way that I would put it. So like I got involved in the markets like 2008, and most of what I did was like on a spreadsheet because I worked for a bank. They wouldn't let you trade a retail account, right? Worked for a bank, and so I would just put trades, and I was mostly trading macro strategies, I guess you could say, and futures, but not real trading. And then as soon as I left there, then I started doing futures trading, and I started with the DOM. So I think one of the things that I would point out, like about my own progression, is that it's been kind of like a lot of slow realizations. I was given all of the correct tools at the very beginning, and that really, really helped me. But in the end, I'm kind of an ADHD person, is kind of approach ends up being a little bit more linear. A usual person will come in and will say, oh, okay, like here's all this information, but this piece of information isn't, that's irrelevant. Like there's a lot of things in your mind that you dismiss that I lack the ability to do. Like I end up looking at every piece of data, end up having to analyze every piece of data sequentially, right? But in the end, that ends up being really beneficial because I don't miss anything at the end of that. And I think that a lot of retail traders, whoa, okay, that right there is might make me have to do something. What was that? That was just like a few thousand contracts just all at once there. That's kind of weird. Well, that may be as far as they go, but that felt like a potential news release and move, but I'm not seeing anything come out of the news squawk. Anyways, so I didn't come to all of these understandings because I was so smart or anything like that. It was just like being around long enough and being forced to go through every little thing and figuring every tiny little thing about the market out, you know? Okay, so the market buys here are really aggressive all of a sudden. That is a really dramatic shift in the flows. So I mean, this kind of looks to me like somebody is trying to make the inverse sine effect come in here. Like we had a really strong downward move, so you come in and you hit it the other way with an equally large blow the other direction, and you're going to end up going further. I think in this particular case, the further would be beyond 19. We are going to have Bowman speak. Okay, so Financial Juice says Fed Bowman makes no policy comments in his prepared remarks, which is kind of what I was expecting. I do think that in 30 minutes, when we get who is it? Mester. I think then when we get Mester, that will probably be a more significant speech and will likely balance out what we got from Bullard. So I'm looking at this and I'm wondering if something triggered like the spreads to reverse or something, because that was quite a turnaround. I think I was quite lucky to have been able to catch a bit of it, but we'll see if it actually runs for us. Forbes tweets, the veteran bankruptcy attorney blasted FTX's faulty regulatory oversight board and its concentrated control by a very small group of inexperienced, unsophisticated, and potentially compromised individuals. When I look at this FTX thing, I guess like I see it as like a potential teaching moment, and like the thing that I hope people come out with this, because I think that the tendency would be for people to say, well, this was just an aberration because Sam Bankman was particularly evil or stupid or greedy or something like that. And I don't think that that's really the case. I think that when you put inexperienced and untrained people in these kinds of positions, that they're extremely likely to do what he did. Like, that's just people's tendency. He's just a normal guy, as far as I can tell, because everybody's like, we're trying to gain insight into the criminal mind. Does he have Dunning-Kruger syndrome? Is he a psychopath? No, I think he's probably a regular guy. He's probably a regular guy. I think that that's important to understand, because you're a regular guy too, right? You don't want to make those kinds of mistakes. So how do we avoid making those kinds of mistakes, right? You've got to take it one step at a time. Because what happens to those guys is they jump up the ladder too quickly, and they don't gain the training that they need to be able to perform at the level that they're at, essentially, right? So for us, as we're trading, we need to take slow and intentional steps, and we need to understand that futures trading should be a multi-year journey. Like I want you to think about how am I going to be managing my futures trading 10 years from now, right? And most people are only thinking about like, well, I want, in 3 months I want to be a millionaire. It doesn't work that way, right? He clearly did a lot of market manipulation. Well, so the whole thing though, no, the way that they gained their prominence was through arbitrage. He hired quants from Jane Street and got really good at arbitrage, basically, when nobody else was really doing it very, very, very professionally. And like the whole thing is that they started getting beaten out by somebody else, right? That's when the problems came in, because then they're losing money on their arbitrage. So what did they do? Then they started to use customer deposits and stuff like that, right? Started to add more risk to the trade, essentially. And that's where he went wrong. But like, again, that's what people tend to do. Like every retail trader, I think almost every retail trader goes through a period where like they're doing well and then they're not doing well. And when they stop doing well, like when they start having the losses, they compensate for it by taking bigger and bigger risks, right? I think every retail trader does that at some point. Did you see that video of him arriving at that meeting with jeans and a t-shirt? How is that regular? That was so cringe, dude. Nah, I think that he was like, you know, your typical internet nerd with zero social skills, probably ADHD. They were like really abusing stimulants apparently. Aren't his parents regulatory lawyers? Yeah, like he has connections. Let's put it that way. And not only that, but he went to MIT, right? So he's probably not neurotypical. But I haven't seen enough from him to really say. So a couple of things that kind of flash ADHD to me, but so like the video clip that I keep seeing everywhere is a video clip of Caroline being interviewed and saying, yeah, like we don't really use stop losses, and everybody's saying, well, see, like they were like being really stupid and irresponsible with risk and stuff. But I look at that and I'm like, well, but they're HFT. Like managing risk does not necessarily mean you have a set stop, right? Especially when you're potentially trading, you know, what would be the equivalent of, okay, so think about you're trading the treasuries, okay? Let's just say that you are doing exactly what we're doing here. You're a speculator in treasuries, okay? But you've been good at it and you could trade 1,000 contracts, right? Okay, managing risk in that situation is like a different ball game, right? A lot of it is going to be how many contracts do you actually have on, right? How many contracts do you actually put on is going to be a big factor. But you and what you might do is take less contracts so that you can allow it to move more against you without it breaching like your daily loss limit, right? So you're not going to have a traditional stop the way that a retail trader has it, right? So here's what happens is you know, the guys that came from Jane Street and stuff, they know that, and they design the algorithm a certain way. And then Caroline, the one who's like managing all of this and everything, she's constantly talking to them. So she knows that that's kind of how they do it. So when she gets interviewed, she doesn't come in and say, well, these are the models and tactics that we use to manage risk at the firm. No, she says the thing that will, generate the most interest because it's controversial to say is, oh yeah, well, we don't really use stop losses, right? So it's not that she's particularly stupid or evil or irresponsible. It's just a regular person. That's what a regular person's going to want to do, is they're going to want to try and generate the most PR for themselves. Refresh your financial juice? Why? It's working just fine for me. It does say, could all users refresh your financial juice? I guess I'll do that. But like it's the same. So this is my complaint about The Wolf of Wall Street. Okay, my complaint about The Wolf of Wall Street isn't about the movie itself. It's that everybody gets the movie wrong. Everybody gets the movie wrong because they're all in denial about how righteous they are. Like, especially because like the thing that's funny about it is that the movie was meant for. I mean, the guy, Martin Scorsese, is pretty left wing, right? So it's made for leftists, right? But you don't want to, leftists are really concerned about how righteous they seem or how good of a person they seem. That's a lot of the driving force behind a lot of liberal behavior these days, I've found, right? And so they don't get the message, because the message is that you're no better. That's what the real message is, right? And if you're really experiencing the movie as a movie, you should get it, because what you should be saying to yourself is, this is effing hilarious. Look, they've got the lewds, and this is such a funny scene, and look at all the crazy things that they're doing. You're into it. The Wolf of Wall Street. We're talking about the Wolf of Wall Street. People are into it. The fact that you get so many guys that almost kind of idolize that movie and the behavior, and that Jordan Belfort is kind of like a hero among people, and he has a TikTok account. It's popular. Things like that, right? What does that mean? It means that the movie was effective. The movie was effective at showing that you are vulnerable to the exact same biases and mistakes and things that will lead you into corruption as those people were. And if you were in the same situation that he is, you would likely have done similar things. That's what the Wolf of Wall Street is supposed to be. And everybody just says, oh, well, it glorifies this decadent behavior, or things like that. I wouldn't be like that. You don't know. You've never been there. How would you know? I hated that movie, Fun Coupons. I don't want those. Wolf of Wall Street did kind of motivate me at the beginning, though, not the degeneracy, but just gaining massive wealth and power via trade. Yeah. But like that's the whole thing. Is what those things work against you in the end. So there's this guy that comments on my TikTok videos every once in a while, and sometimes the comments that he leaves, I'm kind of like, what the hell are you thinking? I think he says those things because he's just so obsessed with that tax rates should be higher, and so everything that he says kind of leads back to that. But he was saying, no, they were just doing, what was in their best interests, like any good capitalist would, because he's in the, late stage capitalism thing. But when you really think about it, the things that Sam and Caroline did were not in their best interest. Almost every decision that they made was not in their best interest, wasn't it? They made mistake every step of the way, right? Why did they do that? Because they did not have enough experience they hadn't been warned, essentially. Really, it comes down to, like, you have to be warned. It's like, unless you know that this is the thing and you've been trained, because like that's what all the training that happens on Wall Street is all about. It's like all of these regulations that you have to go in and take. So they're basically saying, well, these are the things that people, the dumb things that people tend to do. And so that's why we have laws against them. Laws about, like if you are undercapitalized and things like that, and how do you handle it, and et cetera, right? If you come in and you don't know any of those things, you end up doing what Sam and Caroline did, right? And the thing is that usually you get to a point, I think people get to a point where you're so deep in and you have your ego so like wrapped up in it. That's when you really start to, like, what you're doing is wrong and you keep doing it. You do, right? So like I look at myself. If I was in that situation, I would not make the same decisions. But why? Because I've been trained. I worked on, worked on Wall Street, and I've taken a lot of this education, and I know the rules, and I know how this tends to play out, and I wouldn't fall into those traps. But it's only because I've been trained that I would even know that. And if I hadn't been trained, would I maybe, fall in, like, make one mistake because I didn't even know any better? And then that one mistake snowballs into a series of bad decisions that eventually ends up making you do something very, very immoral. I think that's how it works. Yeah, I was in tech. I was in tech for one of the big banks. So a lot of what I know, I kind of learned from that. Do you think that if he was the second largest R donor instead of D, that he would be arrested by now? I think that if he was a Republican, the media would be a lot more interested in it. That's for sure. Yeah, I did fade the yields again. Can you believe it? Feeling pretty good at the moment about it, but let's see if we're able to get the thing to run for us now, because this is about the point at which I was like, okay, this really aggressive buying that we're seeing coming in to cancel things out is probably going to move things past 19. So now that we're past 19, do we see other flows come in? Tech dudes, well, so like the thing is, there's going to be, where there's opportunity to do bad things, somebody's going to do a bad thing, right? Where there's opportunity to do bad things, somebody's going to do a bad thing. But like that's the whole thing, is that that's some people that are actually really, really good people can be lured and seduced into making bad decisions, right? And I think the issue is, and the thing that I'm trying to teach you is that if you just immediately say, well, I would never do that because I'm such a moral and upstanding person, that makes you more vulnerable to doing that. That's what it's about, right? It's the person that comes in and says, man, you know, I have my own weaknesses and I don't know what I don't know, and I'm going to be very prone to make mistakes all the time. It's the humility, right? Like, what makes my stream different from other people that you might see here on YouTube, right? I'm willing to step in here and say, okay, like I took a trade off of that news and it went exactly against me and I lost $40 on it. It was a really, really bad trade. And now that I've done that, it's affecting my mentality and I'm concerned about my own analysis, etc., 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 right? It's a totally an acknowledgement, and the only reason why I'm like that is because being an ADHD person, you just run into this every day, your own limitations, your own problems, right? Your own impulsiveness. Like I've never done anything like super immoral, or, you know, like I've never been in a situation where like you cheated and you did the impulsive thing like that, but never anything like that. But to me, the sorts of things that like stress me out from day to day and that I feel bad about are like, I yelled at my kids, or I said something that was probably not too nice to my wife, or whatever the deal is, right? It's just like you say things, and you're ADHD person. I think you're constantly faced with your inadequacies constantly. And so you don't trust yourself on that stuff, right? But when I look out on YouTube, the whole thing is that like the social media like almost forces you to be narcissistic, right? Like people, they're going to watch you. They want to see that you're right about everything all the time, you know, or that you agree with them about everything all the time at the very least, right? And you always have to be interested in what everybody thinks about you and about your appearances and things like that, right? Teaches you to be narcissist, and it kind of will lead you to a set of people trying to teach you about markets that are going to do the same thing. And then what do you end up with? You get these people that you take too much risk on a trade, and you know eventually they blow the account, right? Jordan Peterson talked about this. If you don't know how you could be evil, then you have more learning to do. Yeah. That's exactly it. Now, there's an extension of this, and this is the thing where I think a lot of people are gonna like really not like what I'm gonna say, and that is, how do you solve this problem? Because it's a problem with people. Well, and that's why we have regulation, and we have these really complicated social structures. When you go and you work at a firm, you start at the very beginning, you have mentors, you slowly work your way up, you're getting training, and there's regulatory training that you have to do the whole time, so that when you get to that point where you're managing those billions of dollars, that you know what's allowed and what's not allowed, right? And that's not what the cryptocurrency people want to do. The cryptocurrency people, they like it because they feel like that they can go in and they can do those things. Guys, the reason that you can't do those things isn't because the system's holding you down or because it's some global cabal that is trying to hoard all of the wealth for themselves. Like, it's totally the opposite, man. Rich people can be so effing generous. Okay. I got to speak to the current CEO of Goldman Sachs when I worked there, because he came from technology and he was a DJ and everybody knew that I DJ'd too. Right. So I got to speak. He was so nice and like ready to build relationship and just shoot the ball and things like that. Like, they can be the most generous people, really, really can be. The reason it is the way that it is because there's a lot of opportunity to do wrong, and we have to have that social structure to prevent people from doing something stupid. Now, there's some really big disadvantages to that, because it can be really hard to navigate that social hierarchy, right? I'm not particularly good at it, right? When I look at it, I feel like I fizzled out. Like ultimately, even though I lasted a lot longer than most people would, ultimately I don't know if the bank was a good cultural fit for me. A little bit too neurodivergent, and when you get next to hyper competitive people, they immediately pick up on that and go after you. But there's mainly data in the interview. Wait, what are we talking about now? Oh, you sent me something else. Oh, well, there's data. Like, don't get me wrong. They did some pretty crazy shit, right? I'm just saying, like, how does it start, right? Sam wasn't a particularly evil or greedy person, as far as I can tell. He was quite average. He was quite average. And the problem is that when you take quite average people and you put them in that situation, they on average will start doing quite evil things. Let's say. So like, go back. I give you, here's another approach to it. Do you remember the interview that Sam did where he basically talked about a Ponzi scheme, right? Where everybody's like, oh, well, you're explaining a Ponzi, right? How do you get into that point, right? Like, that's what everybody was doing. I mean, he was cognizant of what was going on, but like, he's already in the haze, right? He's already compromised and in the haze, right? It's a hole that you just fall into, right? You don't have to be a particularly evil person to fall into that hole. The ones that I think are evil are the ones that, like, you've been in Wall Street and you've had all of the training and everything about the structure is set up to make it easy for you to make the right decision, and you still do the bad thing, right? Those are the evil people, man. Okay, like these people at JP Morgan that were spoofing and manipulating the gold markets, for instance, or those are the evil, or the guy at Goldman that was exploiting the assets of the Malaysia fund. That's really, like, you're going through a large amount of deception and all this stuff. Okay, so man, Bullard is still speaking, but we're gonna be getting Mester here. The majority of psychopaths are average intelligence. Oh, there's usually something off about a psychopath's logic. It's not something that you pick up on right away, but the more you get to know them, the more you feel like there's something off about them. How do you feel about the idea that order flow information is a lagging indicator? Yes, it tells you where the orders go, but it doesn't tell you which side of the trade will capitulate. Okay, so Bob, all market generated information is to some extent lagging, right? Like some price action people will say, well, all other forms of technical analysis are using past data, but not us, because we're only caring about where it is at this current level or something like that. But the truth is you're still basing, where we are now compared to some past price level, and where we are now is based on a trade that already happened and is in the past. And so the ultimate problem comes down to that market generated data is just not very good at predicting what the next set of market generated data is going to be, right? So from the perspective of order flow, we need to watch the order flow to understand what's going on right now. But largely speaking, your edge is probably not going to come from the order flow itself. But order flow is like an essential supporting component. It's only part of this complete breakfast, right? Ultimately, you're going to need something that predicts the orders. And that's where having a really sound understanding of the market, having a sound understanding of fundamentals, but not just fundamentals, but how different types of institutional strategies work and how they may react to certain market movements to be able to predict the flows that will come from those institutions. That's where your edge is probably going to come from, right? That's the way that I would that's the reality of it. Okay, so I wouldn't consider order flow like a lagging indicator per se. But rather what I would say is order flow only tells you what the current market condition is. So like when I look at this, we had this strong pushback and we did get above the 19, but I have not seen any continued flow. So that says to me that I can either wait for the next kind of like period where I might see meta orders come in, but it might be smart for me. Oh, I see. I didn't like that. It might be smart for me to start thinking about getting out. What do you recommend to study if I'm a newbie at order flow? Well, so I have a series I think that is really good. And in that series, I reference other sources that I use to learn these things, right? So you can use that. Ultimately, though, the thing that helps you out as a beginner the most is the screen time, right? It's the screen time, and also coming in, and every time that we see a move, say, what do I think prompted that move? Always ask yourself that, okay? I think that the move that we had off of the bottoms was like the move at the bottom was some sort of a stop run / crescendo event, and the order flow that I saw hitting back was largely a reaction to that. I don't think, so far at least, that there are actually fundamentals behind this pullback in the treasuries. Now, we might get some fundamentals coming in here from Mester, right? But I'm asking myself, what are the flows? And then, confirming them. And at the end of the day, going, oh yeah, okay, yeah, this flow that came in, this was definitely because of this, right? And you'll start to get an idea of it. There's like different types of players, they execute it differently, and the order flow behaves differently. And you'll just be able to see the differences. That's what helps you out the most. Well, S&P 500 been pretty quiet for the first 15 minutes, but it looks like they're starting to push some upside here. Order flow has no context whatsoever. It's what you said. You can access the current market condition, and yeah. But understanding the current market condition is an important component, right? You need to have predictor of order flow plus current conditions equals what it's actually going to do. If you don't know what the current conditions are, then that leaves a lot of questions in there, right? Because you're not going to know how far it's going to go and what the right prices that you might want to use and things like that, right? If you don't factor in the current conditions, you could have a really good predictor of order flow and end up executing it really poorly, right? Whereas if you have both of them and you've really done your work and you really know what the flow is going to come in as, you can predict almost exactly what's going to happen. And always be 1 or 2 steps ahead. Well, seems quite happy here at 19. Never got them to hit into me, unfortunately. Yeah, they're doing this game. So what's happening is they're moving away from me because I... Do you see that? Too late. Well, I tell you what, the flow in the I don't know if you're talking about the Treasury, Tobias, but the flow coming off of the lows in the Treasuries was quite strong, but it's completely quieted down when they got to 19. I think that the trade was just back to 19, unfortunately. There is some buying. Well, there's 2,300 trying to bring it back into the range. I really think that when you said a way of seeing what is a stop out order and an active participant is super important, wouldn't that tell you if the move was genuine or people exiting? Well, so when I'm talking about a stop out, I'm talking about like probably one large player stopping out, right? So I think that if we really did a study on stop orders, we would find that they're pretty randomly distributed, right? But like that's the thing, is that it's better if you have some idea why the flow is coming in, right? I think here today, Bullard is probably the biggest driver here today so far. That's why this moment right here is important, because Master is speaking. The idea that the current price not really be, yeah, that's an important thing to understand. For sure. That's an important thing to understand, if only because you get... Sorry, they're speaking in my head and I'm having a hard time finding words. It's an important thing to understand, if only because of all of the incorrect analysis that comes out if you don't understand that, right? There's so many, a lot of these things, like especially when you get on Wall Street Bets and they make fun of Jim Cramer or any of these other people for what's going on. I think that a lot of that stems from people not understanding that current prices are not reflective of all available information. So it can totally be the case that Jim Cramer is right. Like, it is a really good company, but you just don't get paid because of the flows are the other way, Well, so far, like the things that Bedsemester is talking about doesn't sound like she's talking about when we should stop raising interest rates and what we think about the economy and stuff. She's talking about like more regulatory stuff. So I've heard it's often at even numbers for stops, at least for retail, and to avoid that, but otherwise probably random. I wouldn't put I wouldn't put your stop at an even number. Yeah. So one of the strongest technical analysis kind of based things that we know of, that we know that the market reacts to, is that there tends to be more liquidity and more volume at even numbers. So if you put your stop at an even number, that makes it more likely to be touched, essentially. Basically, it's basically making you more likely to get touched. So I wouldn't put a stop order there. Some big orders pulling here in the micros. A little bit of a downturn here, I think, off of something that Mester said. Short-term funding markets are also still vulnerable. Gilt event is a cautionary tale about unforeseen risks around hiking rates. I wonder if that was, I don't know, that doesn't seem to what she's saying here doesn't say sell to me. It might be the robots misinterpreting her comments. No, I don't have any such insight, Lucas. I only know that Peter has talked about giving us more access to things. I think that what he's talking about is basically making it so that you can make your own indicators for the charts. And I don't know if it will go beyond that or what. But when it happens, I'll definitely make stuff. I'll definitely try and port all my stuff over. Well, I do want to be able to make my own indicators, if only so that I can make a spread chart for Jigsaw, right? See, she's talking more about financial stability and regulation and structures and stuff. I'm maybe this move down wasn't really them reacting to her. It could just be noise. We have kind of been in a downtrend ever since we broke out and touched that 22. What's this from Nick Timmeros? Bullard on the market reaction to last week's CPI. It's a natural thing for markets to be on pins and needles with respect to various pieces of inflation data because we've got so much inflation and investors aren't used to making decisions in such an environment. Shit. The thing that pisses me off about that one is that I got 30 ticks at one point, so did not play that one very well. And I was trying to get out at points and I wasn't getting filled, so I probably mismanaged that one. Yeah, I think I mismanaged that trade. Better than a loss, but I'm not too happy with myself today. It kind of looks like the market orders are there, but they are not pushing it. You see that 2,500 at 16.5 now? Can't get through it. You got it, bro. Well, listen, I don't know if we'll have any other opportunities today or not, but if we don't, there's always tomorrow, right? Oh, that's interesting. Jigsaw won't recognize. Well, I think it won't recognize the input unless the window has focus, right? Oh, I recognize other inputs from the script, but not the mouse will. I don't know. Maybe the mouse has to be on the control. Maybe somebody was expecting dovish comments from Mester, and then they said, oh, well, she's not even going to talk about that stuff, so they gave up. I don't know. I say I don't know too much, but... Someone on Reddit claimed the market makers absorb buys and sells and then push overnight markets on low volume down or up based on the difference in whether they absorbed more buys or sells to get the volume. Yeah, no. So here's the thing with market makers. Okay, first of all, like, how does it actually work? How it actually works is they're just putting up what they think is a good bid and offer based on correlated assets and so forth. And that's kind of the devious thing about it, I think. Like, you have to realize that when you take a trade with a market order, you are hitting into them at a price that the market maker at that current time does not think is a good price for you, right? Or is not the opposite, the optimal price at the very least. Okay, so that's kind of where you always kind of start at a disadvantage because of that. And that's kind of generally why it doesn't end up working out for you as a retail trader, right? On average. Okay. But so this whole idea that you're going to push the market in a certain direction, the best that the market maker can do is hold less liquidity on one side of the market. That's basically all they can do, right? And then, you know, a lot of these moves that we have where it's like it moved down on like zero volume and it was just the bids and offers changing, you know, like the market maker can do that, but it's probably going to be in line with some sort of a correlation and stuff. But they can't otherwise they can't like move the market, right? Like if you're going to try and move the market to a certain place because it's more advantageous for you, you're going to have to probably use market orders, and you're going to have to take a bunch of fills, right? It's just going to cancel it out, right? Like that doesn't make any sense. And while you can like move the markets and possibly in some situations, you know, create moves that are advantageous for you, it's a very risky overall trade, right? It's a very risky overall trade because when you try and exit your trade, you're going to have an impact, right? And the kind of situation where you might even be able to do that is going to be a time when there's not that much going on. So like what you're doing is you're taking on extra risk in a situation where, you know, it could really screw you. It's a really risky thing to do, right? It's a really risky thing to do. People want to believe that these things happen because the idea in their mind is, if I can predict what's going to be best for the market maker, then I can predict where the market is going to go, and I can read this price action and predict these trades, right? It doesn't work that way though, right? So they think they're seeing a pattern, but that doesn't actually exist. The reality is that there are going to be a certain number of people that get screwed no matter which way it goes. That are going to be screwed no matter which way it goes. And they don't have to play those games. The market will kind of naturally oscillate around and work against you unless you have a real edge, right? So like, if let's analyze the trade that I just took there. I hit in at a location because I started to see very strong contrary order flow, which was what I was looking for. And I anticipated that that would probably be able to bring them back to 19 and probably above it because of the inverse sine law. That's exactly what happened. And then I waited to see if there was going to be a secondary flow because I didn't necessarily know what had caused that flow. And I was hoping that there would be some more dovish flows come in. Those more dovish flows didn't come in. So what happened? It came back, right? Because they took profits. Yeah. So the gist of it is, for me to really make money, I have an edge. Like, I need to be able to predict the order flow. In that situation, I did have an edge. It was actually more of the most technical of an edge you're ever going to see me take a trade off of, right? But I did have an edge, right? To overcome the edge of the market maker being super fast and being able to adjust current prices based on correlated instruments, right? Think about it from that perspective. What's the edge that I have? Because like some tendency based on a chart pattern is usually not a very good one. Convergent Trading is having a webinar today about funded trader programs, and I'm interested to see what they're gonna say. I really hope that it is. There's no reason to do them anymore. Just trade your own account. I really hope that's what they say. That's what I've been saying for a long time now. Unless you like really want to do degenerate stuff. You want to do degenerate stuff, then do the funded trader program. Well, they are pushing lows of the day now. You know what? I really hate that on that last trade I took, that I was not able to manage an effective exit. But overall, it was a really good trade still. I mean, I didn't have very much against me, and it really went my way. I got 30 ticks, and under any other circumstances, had I not taken a 40 tick loser earlier, that would have been a really good day. Well, I'm going to be really interested to hear what, like, the next Nomura from next Charlie McGelliglot, or however you say his name, what his next report is going to say with their models. Because yesterday there was definitely some CTA buying, and now today it's like sold really hard. And I wonder if they like immediately had to flip back down and sell it or something. You know, it's interesting to me now that we're down here, though. I don't really see a whole lot of interest in it, like breaking the lows. It kind of makes me think that you're going to get like a higher low sort of a thing. But even if it does that, I'm not sure how exciting of a trade that actually is. The 30-year is bouncing pretty hard, though. the 30-year is doing something kind of weird here. So So I just saw a couple of retail orders go in the 10-year or in the micro, but the market makers took them. It seems like that the market makers are happy with this spot. So I'm a little bit, I can see the 30-year coming up here. So I feel like that I could justify a trade, but I'm a little bit. The entrance on the trade is making me a little nervous. I'm watching this go without me. Not really seeing the flow come into the 10-year, only in the 30-year. And I feel like that the 30-year is already came up a little bit too quickly. You think seeing one-side flows will lead to more one-sided order flows on the same side if sales come through? We can correctly assume more sales will come through. Okay, so there is a proven strong autocorrelation in order sign, meaning that if you see a sell order, you're more likely to see more sell orders. So I know this sounds like really silly, but like the most accurate statistical expression of this is if you see a buy order right now, an hour from now, you're 0.5 or 0.05% more likely to also see a buy. So there's long-term persistence in the sign of order flows. Okay. So what causes that? And everybody thought that, wow, well, it's because I see other people buying, so that then I start buying too. But the models didn't bear that out. And the model that ended up being the most effective at explaining the behavior was the execution of large meta orders. Meaning that if somebody is coming in here and buying, and they're a big player, they're going to be buying all day because that's what it takes in order to execute that. And that's why you get that persistent behavior. So seeing a kind of an auto correlation in the order flows is very important and useful for that reason. Unfortunately, right now, I'm not sure that we're seeing that unless they're going to sell it all day. But especially in the 10-year, I see a lot of sideways movement in the order flow. So if they are doing it, there's a lot more limit orders involved than usual. Any important macro indicators today? Well, there's something weird is going on with the dollar. That's something that I think we got to keep in the back of our minds. So there was a recovery in the dollar, and nobody really knows what caused it. But they basically bounced the dollar overnight. Well, I don't know about this. The Treasuries barely, that was a pretty decently strong move, and then it's stuck already. And I'm kind of concerned that they're going to fall back down. Carl Quintilla tweets Pelosi to say she plans to stay in Congress as a backbencher. Reports Puck Reporter. Cool. ZB won't bend the knee. Well, ZB stopped too. The other interesting thing is that ZB came up very hard, but the cumulative delta didn't rise, so. And the 6J didn't move. Clear flight path and the book resting. No, I don't know about that. Although one of the issues that I have is it looks like most of the liquidity is pulling whenever it ticks up, right? Like most of the trades that we've been seeing here lately in the 10-year are like 200 lots. I haven't been seeing a they tick up and then the offer doesn't pull and they immediately trade. Well, there's 726. That's not bad, right? Like if they did that at 17.5, then that would be like the change that you're looking for, right? Iceberg at 17. I kind of wish that I was in this maybe from 3.8, but like I'm just not happy with the prices that I'm looking at every time here. Saying your last stream expect to move against you before seeing follow through in your prediction, assuming you got it right, it had to do with market making. Well, I wasn't saying that it like has a tendency to do that per se, as much as it is like it just works so strongly to your advantage, right? Assuming that you actually have a strong predictor of the flows. You have a really strong predictor of the flows and then you get something contrary to it, then that can be really advantageous. So like the play yesterday would have been CTAs are going to go long. There was some indications that was going to happen and I had kind of forgotten about it, but I also wasn't sure like what were the prices to go through and all that sort of stuff, right? But what happened? We had some news that pushed us down really, really strongly, and then they bought that, and then ever after that it was just all trend up, right? So if you knew that was the flow that was going to come in yesterday, and it was possible to have known that, then you could have bought it and caught that whole thing, right? So that's kind of what I was getting at. If you really know the flows and you can get a move against you. Mike Zaccarde, CFA CMT, says terminal rate back at 5% for May through July 2023. In other words, market seems to feel like that they're fairly priced based on Fed expectations. And maybe we're not going to get as much opportunity, is what I think that's screaming to me. A little breakout there in the 10-year and the 5-year, but the 30-year lagging now. Are we getting steepening? Would really like to take another one, but I don't know if I should. I don't know. This move feels it's a little iffy. Like, it looks like it's reversing and it's like a higher low sort of a setup. So that could be good. But it's not really, it's not really picking up the volume like it should. I'm really concerned that they're just going to collapse back again. I've noticed the price really likes to do the opposite for a little before reversing and moving in the expected direction, specifically in regards to ES. Well, ES definitely does do that. But like there's just a lot of noise in ES though, right? Like I don't know if you can really read too much into those kinds of oscillations though. I do think that's one thing that might happen is like you're making a market making robot. You're going to you program in all of the expected flows for the day, and so it will have a model of what it expects the flow to be. And in periods where the market is being quiet, it will hold less contracts in the direction against the move so that it's easier for price to fall against the move. Essentially, you kind of have to do that to get enough noise in the market for the market maker to make money anyways, right? The one that I'm telling that I know you can look for though, okay, is you're getting a really strong order flow in one direction, and you have a reason to think that there's going to be an order flow the other direction. So you see it coming down, there's like some stop out or something like that. The best situation is you had a node where a lot of volume traded and there was low latent liquidity, so it basically just went back and forth at that price a bunch of times, okay? And then you get a move down, and it's a strong move with some flow behind it, and then you're expecting some other flow because of something else going on that day, and you start to see that flow, and it's aggressive flow in the opposite direction, just as strong. That's your best situation. It's probably going to go back above that starting balance area, or whatever you want to call it, that volume node. You shouldn't call it balance, but that volume node. And those can be some of the strongest runners. Elon Musk tweets Sam Bankman-Fried is ineffective altruism, but they thought he was saying it was ineffective altruism. You'd have to read his tweet, but he was tweeting about that. Interesting. Wow, really? Because of Ron DeSantis' GOP wave in Florida, we'll have no Democrats in statewide office for the first time since 1873. Wow, really? Is Florida really gone that Republican? Elon Musk. I'm really skeptical of this flow. In fact, I'm kind of starting to think of taking it long yields. I don't know if I really have a good enough reason to. I think that I'm just being a little impulsive and FOMO-y because I took a big loss today. And then I had the one come back and I didn't get anything from it. That one really irks me. I really wish that I had been able to get at least 20 off of that. Well, there is that big order up above us at like 2022. I think that that's just kind of there because there was a previous pivot. There's another little push higher. I am starting to see it in the 5-year. Oh, wow. And they did come another 5 basis points. The market maker in the micros being really frustrating today, man. I'm just not doing what I want it to. I'm being too picky. Do I just need to hit it? I feel like as soon as I hit it, it's gonna start going the other way. As underlying rises, I've seen the limit bids fall off, letting unknowing shorts push price down for an aggressive push up to follow, allowing longs to get a better price in ES. Yeah. Well, like I think that's the whole thing is that the person that's trying to buy it wants to let the seller think that he's gonna win. and then come in. So he just kind of waits, and then everybody goes, oh, well, it's not coming, I guess we sell it. And then the buyer comes in and pushes against them. So it's more the block trader that's doing it than the market maker, right? And the market maker may just not hold as many bids to try and create more movement in price. Well, now that's kind of curious. So the 30-year seemed to move there because the micro is not coming back to 3.79. In fact, the 30-year is starting to get to the upper end of its range while the 5-year is still at the lower end of the range. So we got some pretty hard, we got a pretty hard flattener going on in the 5 and 30 today. Esberg 17.5 offer. And it's still kind of like I was saying, we saw a little bit of buying flow come into the 5 and the 30, but not a whole lot. And I'm already kind of starting to see signs of that flow reverse. And you can see that right there, the 30-year dropping down there. Let's watch that. So they might get stuck and fall back into this range here. Looks like we have more upside potential. I don't know, man. The flows seem really iffy. I bet you after I leave, we get some sort of trend and like they end up going long and it's like really crazy or something. But at the moment, what I seem to be seeing is that interest has just really died down. Like, I think what happened, like I was predicting, or not predicting, but I was kind of speculating earlier that, oh, maybe some people were expecting a counterflow from Fed's Mester and it didn't come, so they fell back down. So you had to fall back down, post meta order pullback, which is what we're in right now, and now it's just gonna stabilize at 17.5 and not do anything. That's what it looks like to me. There's this person that comments on my posts that's named Make $750 per day. And I've just kind of been letting them comment. I'm not sure if I should. Like, it's engagement, so it helps me, right? I don't know. Sabin was looking at 7.9, was looking at 7.85. Was like, I've sat here through like 15 ticks. I mean, there's no link for me to visit the channel. I haven't been to the channel. I'm sure that they're scamming. I guess I can come in and I can report it. The other issue is that my original trade was at 3795 and I'd be plus 20 again. We have been getting more viewers and we've been peaking at 32, so we've been doing better past month or so. I don't know though, man. I went from trading like a rock star to this month hasn't been very good. I haven't gotten a good trade in a while. It was like I had a bad trade and then I had like 2 okay, like tiny winners, and then I had another bad trade. That's not good. I feel like I keep getting this market wrong. Oh man, look at that. I feel like I missed this too much. Like it's doing what I want, but I don't know if we can fight all of this or if this is a good spot to take it. But I think that the point I should have made, I think if I had held that original one, it would have probably have gone at least 10 ticks against me. But I could have held out and made the 30 in the end. Oh, not the 30, 20. Would have made 20. Like, leave a leg for a choppy day. Yeah. Today's title should be Bullard smacks Treasuries back down. Why was it clear that yields will reverse to some extent? Wasn't it? I don't know, Tobias. I feel like that maybe I'm just kind of hoping that they would. I don't know. Seems like there's another little bit of a node forming here just above the breakout from 19. They did cross the quote-unquote VWAP. I mean, the thing is that yesterday I didn't really feel like I had anything. I actually was trying to go the other way. I was trying to sell it yesterday. But that one ended up being a really strong flow. Bitcoin's seeing a jump there. That's interesting. Even if I had taken 77, I would be up 5 ticks right now. I'm really... Oh, Kashkari is going to be in a panel discussion? Oh, that's going to be at 8:40. I didn't go that far forward. Both Feds Jefferson and Kashkari will be speaking at like a roundtable discussion type sort of a thing. So I guess we got more to come. Looks like the Treasury fell back down and that there's something's trying to prop it up though. The 30-year is the one that led here on this, which is kind of funny. Well, it's not kind of funny. The thing is if we're getting flattening. So this is another thing, is that if the overall trade is lower but flatter, then this flow that we're getting could be driven entirely by the buying in the 30. So you have to discount this flow in the 30 a little bit. You know about terminal value and DC. What is DCF? That sounds like the common factor. I'm not sure what you're talking about. People use value in all sorts of discounted common factor. Oh, discounted cash flow. Yeah, well, I've done discounted cash flows. Yeah. They've never referred to it as DCF. Yeah, but you do discounted cash flows. That not that complicated. Well, when you said discounted, it was like, oh, maybe he's talking about the discounted cash flows, but like I don't know why you would bring that up. So if you're doing investing in bonds, then discounted cash flow is one of the first ways to come in and look at whether I want to buy this or not. But it's not really super pertinent to flows, unfortunately. But I have to do that on my Series 65 exam. Although they keep it really simple. They never sit down and be like, okay, here's the coupon and here's the treasury. What's the, what are all of the discounted cash flows over the life of the bond or anything like that. Having trouble coming up with the terminal value? What are you trying to do exactly? I mean, the way that you would do a DCF sort of a thing would be, okay, what is the coupon of the bond? What is all of the payments that I'm going to get from the coupons? And then at the end of the bond, I'm going to get the principal back, right? So that's the cash flows that can come from this thing. And then you compare all of that to the current market price with your discount factors involved, and you can say whether or not you want to buy that bond or not. HB10, I've never heard of that before. Probably things that I'm going to need to learn though, huh? You know, when I have a day like this, I'm often like, well, we got to work harder. We got to do this thing and that thing. I feel like I've kind of gotten to a point where when I get it wrong, I don't really... I'm just kind of like, well, I got this one wrong. I just have to keep pushing forward and next time get a better one. Like, there's not like some game-changing thing that I can do. And that's not as motivating, you know? And I feel like I'm just going to come out of this just like, like chemically speaking, a little bit lower, or might be a little bit harder to get things done and stuff. But at the moment, I just feel a little tired and discouraged. And I'm sure that I come back tomorrow and I'll be just fine, but I'm a little frustrated today for sure. Terminal nominal value usually is taken to be the 30-year bond yield equivalent in perpetuities, assuming your business will be a going concern. Yeah, so the question is still, what are you trying to do? Are you looking at like some corporate bond somewhere and wondering if you want to buy it? Because that's the sort of thing you're kind of talking about, right? If I understood what the exact application and overall goal was, I would probably be able to get, and I don't know if I would be able to give a whole lot of advice, but actually I would probably be able to give you a better idea of how you should be approaching it. Well, look at that. They came back to the spot where I was like reluctant to get in. It's kind of screaming. Well, it's not screaming, but I think this kind of suggests that, yeah, I could have taken that, but your larger concerns and everything are warranted. And maybe it's not really going to go much of anywhere. I'm also especially interested that it's coming back to 17 and not 19. It fell a lot more. Just flip a coin and press buy. I do feel like now, much after the fact, that the amount of edge that I felt I had in that situation did not justify taking on the amount of dollar risk that I did. Right? Like if I'm going to take on $50, it should be like an FOMC meeting or something like that. If I had done something more reasonable and like only let it come back $20 on me, which would have probably have meant that I would have almost immediately had to puke it, right? But then I might have been able to trade this other action a little bit better. Well, I don't know. Even if I had came out here, I would just be down 20. I could have gone in here and then just been down 20. Or if I had gotten lucky, maybe some other things had gone a little bit differently. I could have come out with plus 10, right? So I think that was a little bit of a mistake, as I took on too much risk for this situation. I did that because the spread had widened so much and it was like still staying wide, but yeah, that sucks. That was probably the other thing, is that paying for the spread clearly wasn't worth it in that situation, was it? I think I had just, maybe sometimes you come in with the idea in your head that you're going to take a trade, and so you want to find it, and you take it even when things don't make sense. I mean, that's one of the things that I kind of struggle with right now, is that I feel like that I can talk myself out of or into anything if I really want to. So that kind of makes it difficult for me to know if my reluctance to get in or my desire to get in is really justified. Well, these flows are really turning down, and it seems like, again, like the bids are really soft. The bids are really soft. So that means it's a good move down, but not necessarily one that I want to pile on. Okay, well, we're getting Jefferson and Kashkari talking now, so let's stay frosty, shall we? the way I've been saying it to people lately, G59. It probably like weirds people out when I say it to them on Reddit, but I say divest yourself of all forms of technical analysis. Yep. I do kind of, another perspective that we could take on today was that Fed Bullard's bearish comments was a significant point that pushed the bonds down. And well, we had a bunch of other stuff happened that possibly could have driven flows. In the end, it didn't really drive too much, and we've just kind of been randomly bouncing around, and that basically everything, the main event happened before I got in. The main event happened before I got in, and everything that I've been looking at since then has been noise. Reject modernity and embrace tradition. Yeah. But traditionality would be like fundamentals, right? Ah, you got it. Yeah. I don't know. Are they gonna bust the lows again? Have you ever seen a level respected in equities and thought that can't be random? Say 400 SPY acting as strong resistance or strong support. Okay, so I definitely see levels that I would say the behavior. How do I say this? Because I'm gonna say like it's not random, but it is random. So like every time that I see a level that ends up mattering. Okay, so like the scenario, I think the best kind of a scenario for this sort of thing is like, okay, the options gamma says that 4,000 in the S&P 500 is a really important resistance level. Our rally can't get above that, and everybody on CNBC is talking about it. And it's on Zero Hedge. They mention that every day. Oh, we got to that level and we turned back down and all of that sort of thing, right? As soon as the market starts to give you a hint that like that level matters, it will start rotating around it. And you'll see it over and over and over again. And like if you're sitting here like, okay, I want to take a reversal at that price. And at first you're thinking, oh yeah, totally respected my level. I'm so smart. I can see it. It was in the chart. You see, guys, technical analysis works. And then what happens next day? It's right back there and you lost all your profits. You start second guessing yourself, right? I just find that the more critical a level is, the more noise you get around it. That's what I see. And overall, for my trading, I'm much more interested in getting into it when they're not interested. Like this right now, we have a move up and there's a bunch of volume behind it. You notice it makes me that much more cautious about getting in because from my perspective, I'm trying to predict order flow. If I just saw a bunch of order flow come in the direction that I wanted it to go, that should be supportive of me getting in, right? But if it was too much order flow, that kind of means like, well, but how much more flow could there come after that? It's too much now. It's too much, and the possibility of more coming out behind that is lower, right? I would rather get in when nobody's interested in it, long before the flow comes in, and I only have a teensy weensy hint that it's coming, or like a teensy little hint that flow is starting, and get in, because you want to be early, right? You want to be as early into the move as you can. And the more interest that you start to get around something, like the more randomly it starts to be, right? Whereas what would really interest, the thing that really interests me more is like a breach of a level that like everything piles in on it. Like a breach of a gamma level where it really starts pushing price once you get past that, right? That's I think a way better trade. Because gamma can really predict flows, right? But like, especially if it's like a Fibonacci level or a daily moving average, the market definitely reacts to them. But I I guess the point is, does the market react to certain prices? Yes. But the more that a market reacts to a price, the less edge there actually is in it. If I don't get any immediate flush prices, spin real fast, like to pay these yen. Well, you know, the market that we're in kind of suggests like you've got a good winner, and then you should probably take the profits quickly. Today, I did not take the profits quickly enough because the Treasury has shifted back very much into its mean reverting ways. I mean, look at this thing today. We've moved pretty good range. We've moved pretty okay range, but it's gone back across this range like twice now. So it's actually kind of choppy, right? And probably the best plays today have been wait till it gets the extreme and fade it. Yep, seems to me, sounds like you want to get in right before the big money, or at least the same time as the big money is getting in and causes the move. You either need big money or know someone with big money. Yeah, well, yeah. Well, what I'm doing, CD-ROM, is I know enough about the big money to know what they're going to do before it happens. That's generally what I want to do, right? So the best situations, I think, well, not the best, but the most common situation is a piece of economic news that I can say, okay, this piece of economic news is important, and that's going to cause this to come in and that to come in, right? There's a lot of inefficiency in the market around that sort of thing. But there's also some flows like end of month flows, CTA flows, options driven moves. I look at areas big money will initiate. So I don't think that makes sense. So the thing about the way that the big money executes, as I look at it, is those really big order flows don't give a fuck what the price is. So for those kinds of flows, you have a better chance of predicting when they're going to come in based on the timing of things than it does based on what price it is or where it's touched one. Seth has his BlackBerry off screen with his GS. You know what? They so when I worked there, they gave me a BlackBerry, and then, you know, things eventually shifted and everybody had smartphones, and they just never asked for them back. I mean, at that point it was useless anyways, but they never wanted it back. So I think I still have the old BlackBerry somewhere. Yeah. I mean, it was kind of funny because at the time it was like everybody that was doing business insisted on having the BlackBerry because it had all of the keys at the bottom, because they didn't like any other kind of scheme, and a touchscreen wasn't reliable enough, right? It's kind of funny to look back on it. So there was this, if you were on the forefront of the technology, there was kind of this interim period where you know, that nobody remembers. Because I remember going to CES that year, and like BlackBerry had released another BlackBerry like that, and like everybody was already over it because the iPhone was good enough. But here's the thing. This is the thing that I think is really interesting about the way that the industry works. Is that the guys at Goldman, for instance, they execute it. What they're good at is executing it. They're not the ones that actually decide that they're going to buy something and what they're going to buy and all of that sort of stuff. That's a hedge fund wants to buy it. Hedge fund wants to buy it, and they talk to Goldman, and then Goldman executes it for them. Right? That's how it works. So really, the ones that you want to understand are the hedge funds and stuff, which I guess I don't have as much understanding of, but you know, I got I got to see the other side of it. So I got to see kind of like the sort of way that they kind of went about it. And then we were able to learn all of these things about how CTA strategies work and how gamma hedging works and what are the major like profit making strategies in the market right now. So probably I should understand more about them. I wish I had a model that I could use, you know, like Charlie McGilligot, they say, oh, okay, like the CTAs are max long now, sort of a thing. Like, I wish I had my own model that told me that. That would be really useful. When I left KPMG last year, they even wanted to have back the old iPhone. Oh, it's kind of weird. Like they never wanted the BlackBerry back. I mean, the thing is by the time I had left, I hadn't used the BlackBerry in like 2 years. So I think that they had all just completely forgotten about all of those by that point, because they were starting to push to, you put stuff on your cell phone, right? Their UBS has one that's available freely, really? If you could find a link for me, that'd be great, but I'll try searching for it myself later. Really what I need is I need to be on Nomura's list. I need to pay $10,000 or whatever it is for Nomura. But Treasury kind of pointed down a little bit. Well, I feel a little bit better now, guys. I'm not going to be taking a trade. That was like 2 minutes. 2 minutes to when I'm probably got to get going. I forgot what it's called. I just saw it said UBS on top and ignored it. It's so bad. It's really true though. I really feel like that people get the Wall Street research bit wrong. Okay, like the reason why the analysts, quote unquote, are always wrong is because the analysts are only tasked with looking at the fundamentals, and it's orders that move price, not fundamentals. So if you understand all of the flows and everything, that's then when you can make very, very predictive calls. But the kind of calls that you can make based off of those flows are much more short term, right? So that means that those analysts are going to be wrong a lot. But that doesn't mean that their actual analysis of like what the fundamentals of that company were and everything were wrong or useless. And so there is a lot of value, and the Goldman investment research in particular is really effing good at it. Just realize that Goldman Sachs themselves, the traders at Goldman Sachs, they don't make their decisions based on what Goldman Sachs investment research says, because they're executing for clients, right? They do the executions that their clients need. So they're basing everything on their expected flows. But GER is still the best research out there, followed closely by JP Morgan, in my opinion. And you should read what they're saying. Yeah, so the other thing was when I left Goldman is like, when I first got there, they're like, okay, here's the office supplies. And I'm like, oh, they have a calculator. And is it that a really big calculator? Is that I'm actually not sure where the big calculator is. I think my baby, my toddler stole it. I wonder if it's like up in his room or something. Yeah, because it's not over here. Well, I have to go find it later. But So I got that calculator and I always had it on my desk. And, it was company office supplies, right? So I thought when I left that they would take that back and put it back in the office, but they didn't. They sent it to me. So I kept that calculator. I better find that because that calculator is a little precious to me. That's my best memory from that, is that Mark sent the calculator and all my stuff. The whole thing was kind of interesting because I think ultimately that my boss did like me, but it had to happen the way that it did. Well, it's time for me to get going. They're still just chilling here at 15. Like now that we've had like 2 bounces and then come back to this spot, it really makes me a lot less interested in it. It could be a descending triangle and they push lower later in the day. I don't know. I'm gonna be curious to see how it reacts going into the European close and all of that sort of stuff. But they just asked for my ID card back and I get to keep everything else. Yeah. Well, so there was this one guy, and he was Chinese. Like he grew up with a rich family in China and then came over and got a job. And he was, like, I tell you what, the Chinese, they can be kind of harsh in their culture, and he was definitely like he was hard on people, and so nobody liked him. And he used the same mug every day for his tea. And so it was all tea stained, and it was the most disgusting thing. So when they were finally able to let that guy go, my boss, he threw that mug away. That's why I feel like, wow, the fact that they gave me the calculator made me feel pretty good. That was like, oh, I think Seth would appreciate having this calculator. Let's make sure that we put it in. Even though I think he was probably supposed to put it back in the supplies. Because it didn't, like, none of the pens or any of that other stuff came. All right, guys. I will catch you tomorrow. In the meantime, stay excellent, team. That was a rough day for us, but rough days are going to happen, and that means we can still always try and be excellent and try again tomorrow, huh? All right, later.